Welcome back to the Compassionate Capitalist Show. This is where we reveal the secrets of creating wealth through successful entrepreneurism and scaling companies and investing in those kinds of entrepreneurs. And as you know, I love to have people on my show that walk the walk and talk the talk. And in fact, my guest today, Brett Martin, you're in store for some great insights, experiences from this accomplished serial entrepreneur, angel investor, venture capitalist, and dare I say it, a visionary. I think, well, you agree with that last word once you're finished listening to our chat today. Brett has spent his entire career building or investing in technology startups, including stints as a co-founder in Switch App, which was a mobile recruiting app, co-founder of Sodar. And folks, that's in that proximity tech that we often take for granted now, but 9 years ago, it was pioneering in location-based social network. And as an entrepreneur in residence at Primary VC, a New York City-based seed stage fund, and as the director of investments at App Fund, a New York-based incubator and seed stage fund, and Vice, the multi-billion-dollar media company. Brett is currently president and co-founder of Kumo Space, a very cool virtual office platform where teams show up to do work, socialize, conduct workshops, and even play games, as well as the co-founder and managing partner of Charge Ventures, a pre-seed focused venture fund based in Brooklyn. Brett and his companies have received awards such as AdTech's Best Mobile Startup, TechCrunch Disrupt Runner-Up, and has been featured in hundreds of media outlets, including New York Times, CNN, Huffington Post, Fast Company, Time, Financial Times, and now the guest on the Compassionate Capitalist Show podcast. Welcome, Brett.
All right. Well, thank you so much. Great to be here, Karen. I feel like I wish I always had you introducing me.
Well, we can make that happen if you want, So the first question, there's a proverbial question that is worthy of sort of a Socrates kind of discussion over a few beers, I think. Is an entrepreneur born or bred? We know when it comes to venture investing, it may be in the blood, but it takes some coaxing to draw that passion out. So to you, who started your professional career on Wall Street as an equity research analyst before your first startup, what is it for you? Is it in your blood, or was it the desire to step into the uncertain, exhilarating world of entrepreneurship cultivated?
Well, for me, I think it was definitely born in the sense that, I grew up selling seashells by the seashore. We used to go and get a bushel of really dirty conchs that the fishermen would dredge up in the bay, and then we would take them back, scrub them off, bleach them, and then sell them for $2 a piece. So we're making a 95% margin on conch shells as children. And I still remember the day I have a younger sister, and my parents found out that I was paying her 75 cents an hour and then making a markup. And I remember they came in and regulated me half of my profits go to my sister. I still remember that day. They were probably right. Got to keep it in the family. But at least for me, it was always sort of the only thing I could do. I tell a lot of people now that are, they've got great jobs and they're debating whether to start an entrepreneurial adventure. And I say, I would not do an entrepreneurship unless there's no other choice for you, right? And that could be because you can't hold down a job. Like in my case, I don't think I'm terribly employable. But for other people, it might be because they just can't think about anything else. They get so obsessed about an idea, they get so obsessed about a future version of the world that they can't do anything other than work on it. And so, I think that probably there's some natural aptitude, but obviously, whether you should strike out or not depends on whether you have an idea that you believe in enough to give up everything else.
Absolutely. That's great advice, because so often, when you have turmoil in the marketplace with jobs, and we've seen that, ebb and flow, right? People find themselves in a place and they go, well, I'll start up a business, but they don't have that fortitude, that stomach, that hunger to really burn the midnight oil and make some of the sacrifices they have to make, particularly if it's a whole new way, it's something that's creating a whole new market, a whole market transition of how people do things, which you have a background of doing. So when did you find, like, in your first company, did you say, I can't believe nobody is doing this yet, and it's such a clear problem to be solved? Or did you, say, I got to go do something and then I'm going to find the thing, and kind of fell into it? That's still kind of a chicken and egg thing, but where did you get that spark, that first spark?
Yeah, I mean, well, it really depends on when you say it first. My first one was sort of, I had, nice access to open boardwalk, and we had this great deal for shells, and, sort of saw an opportunity to, look cute as a 12-year-old, and with my, 9-year-old sister, and,
Well,
sell little knickknacks. I think it was really, we had a competitive advantage there. I think, with my first company, Sonar, the last, it was 2010, 2000, and the last big thing, at the time, was Facebook. So Facebook was really like the it company at the time. And then the big technology catalyst was the iPhone had just come out. And so, sort of the opportunity that we saw was, okay, well, maybe the next big social network or will be something that has, will be mobile, right? And so that's why we came up with this idea of, okay, let's use the technology, the online information about you, and use that to connect with people nearby, because, people are always interested in people nearby. And so I think we saw an opportunity, based on a technology catalyst. And a lot of, entrepreneurship is sort of timeliness, right? Like,
yeah,
if there's a really good window, if there's a really good opportunity, it's only going to be around for a little bit before someone does it, right? So these, there's things that create opportunities, right? It might be a new technology, it might be a new regulation, it might be a new customer segment. And so, entrepreneurs sort of see that window and seize it. They see the way and they act immediately, right? So I guess, always being an entrepreneur is like always kind of paying attention to, like, sort of what new opportunities are arising, what are the changes in the world, and what new opportunities are arising.
yeah. Okay, so that segues interesting into the whole concept of investing in entrepreneurs, right? Because a lot of times, part of the challenge of investing, I call it, I know you know this term, skating to the puck, right? You're anticipating where trends and technology and advancements are going, so that you can get in early stage, and then it evolves into where you think there's going to be this convergence of opportunity. So it's like the investors, on one hand, are anticipating seeing that, but then also the entrepreneurs are like having to almost leap ahead in a way. You know what I mean? So first off, what made you start to make the transition to the other side of the table as a capital investor in entrepreneurs?
Well, yeah, so a couple of things. I think one is the extension of what I was just saying, which is, when in venture capital, you're looking for like massive value creation in a very short period of time, right? That's a key definition. If you look at the, publicly traded companies, I think it's, I don't, some large percentage of it, I think it's like 30-40% were venture backed of publicly traded companies. But that means that, 2/3 of them almost were not, right? And so the difference is that the venture capital backed companies, the plan is to get really big really fast. And so you have this kind of compression of value creation. And so when you're looking for as a venture investor, is you're looking for some very timely opportunity that is, can be really big really quickly now, where, there's other ways of making money that they're just longer term, right? So that's why I think venture capitalists and venture backed entrepreneurs tend to be looking for some dislocation or sudden shift in the market, whether it's because of technology or it's because of some cultural trend or it's because of regulation. They're focused on those discontinuities because those are what create kind of opportunities for massive value creation in a very short period of time. And then as an investor, for me, the problem was that I was always interested. I was in the entrepreneurship club at university, and we won the business plan competition, and we learned about venture capital. Really, always thought, wow, what a dream job is to sit around, listen to really smart, highly motivated people, pick a few that I really like and think have big futures, and then give them money and then work together and try to get rich. I mean, what an amazing job. And so I always thought that was great. And for me, it basically became, after my first startup, and it was a roller coaster ride. A lot of things worked, a lot of things didn't. Ended up kind of incinerating, a few $1,000,000, and I, jumped immediately back into my second startup, which I think was maybe not the smartest decision. I don't know if you've ever been in a rebound relationship, Karen, but it's usually when you're in a relationship for all the wrong reasons. You're not doing it because the other person's so great, but because you want to prove that you're
Yes.
you are valuable and
Yes.
wanted. And I think being in a rebound relationship, a rebound startup, is like not because your idea is so good, but rather because you want to prove that you're a good entrepreneur. And that's not really a good reason to be in a relationship or do a startup. And so when I rolled off of that,
Very
my
insightful.
rebound startup, I said, okay, you know what? All I know how to do is start companies, but I don't want to be in a rush. I need to really take my time and pick the next one. And so I thought no better way of doing that than angel investing. I get to stay in the mix, get to pay attention to trends. I get to meet a bunch of entrepreneurs and then, work with them and make money. And so at the time, unfortunately, I didn't have any money to angel invest. So I ended up having to go raise money to invest. And then, it turns out that that's actually what becoming a fund manager is raising third-party funds to invest. And so I ended up starting another company. It just happened to be an investment company. That's how I started Charge Ventures.
Oh, so you sort of leapfrog the whole solo angel, be a part of an angel network and be on a committee to just straight up be a venture firm.
Yeah, I mean, that's sort of how it worked, I guess. You know, I had been consulting for a number of startups, and I just thought, this is really fun. I like it, but it's quite limiting. Your sort of bandwidth is you're limited by your time. So I thought angel investing was a way of getting higher leverage on that. And yeah, I ended up, meeting my partners, and we ended up, raising a small, few $1,000,000 fund just to prove access. And then here we are, 7 years later on fund 3. So funny how
Oh,
life works.
okay, okay. So 7 years into it, yeah. So we're gonna pull into that, and let me set the stage a little bit because I want to remind our listeners, right? And then based on the conversation that you and I had previously, you know, a big part of what I'm trying to do, I do with this podcast and I did with my book, Inside Secrets to Angel Investing, is to, look at the fact that all investments have some element of risk. But part of being a successful entrepreneur is because you have the potential to create great wealth. That's, historically how great wealth has been created. And what people don't often realize is that it's those investors that are sharing that ride. They're investing and funding that growth, that entrepreneur experience, and get to share in that wealth. But then the real secret comes that they don't teach you in school. They don't really teach you anywhere except for in the real world, is when you have the opportunity, and it's the real important piece of creating compounded wealth, is being able to invest in multiple companies over a period of time. And then you get to, you don't have just the one track of being an entrepreneur that succeeded, or maybe a two-peat or a three-peat, right? Or a few things, but really within the venture space, you get to see the best of the best and choose, and then have multiple investments in that. And I saw that when you invest in multiple companies and compounding, leaving your thumbprint on the world, it really seems like Charge Ventures broke that code. In your website, you have 57 investments with over 5 billion market cap. And that, I'll just pause for a second to let that sink in. And so that's been done over this, you said 9 years?
Past 7. Yep.
7 years, 7 years. Wow. That is really, quite impressive. And that's what it's all about, because not only for your founders, but all your limited partners that are partying in there, and your third time around, recognizing that you've got this sort of way of building that out. So I want to, kudos to you for having done that, particularly at that seed and pre-seed stage. It sounded from what you said earlier that your pathway, your journey there was because you liked getting involved and getting in these things. Is that why you chose to be a seed and pre-seed versus what traditional venture firms, kind of these stodgy Series B and Series C firms go with? So many people think of VCs that way.
Yeah, I mean, first off, thanks, very kind of you. It's really, we're just small participants in these epic journeys that our entrepreneurs have taken. Just grateful to be along for the ride and be able to work with such talented, passionate people. We focus on pre-seed in large part because that's what we know. It's not what we know, it's what we like. Everyone at Charge is a founder. Everyone is either has ran or is currently running businesses on their own, and so we like to think of ourselves as kind of like, you get the benefits of working with an angel, a fellow founder, with empathy, with sort of hands-on tactical knowledge, relevant tactical knowledge, but you get sort of the institutional backing, you get the capital, you get the sort of gloss of working with a venture fund. That's how we pitch Charge. And it's what we know, right? We know how to go from 0 to 1. We know how to take something from an idea to a product in market with revenue and institutional backing. So that's what we focus on, and it's what we like. It's like everyone else it's too early. It's too early. Come back. When you have more traction, or when you have more revenue or whatever. And we never pass because it's too early. I mean, sometimes we're not convinced. Sometimes it's not for us. But too early is something we don't even allow ourselves to say. So we think that there's a gap in the market there. We think there's an opportunity for an institutional touch at the pre-seed stage, and there's still not a lot of folks out there who are willing to write the first 500K check into two brilliant gals with an idea and maybe a little bit of a prototype. So we think there's a market opportunity, and that's where we're going after.
That's great. Yeah. So I see there's many different industries represented on your portfolio. And for folks that are listening, let me just give this to you right now. It is charge.vc is where you want to go to check all of this out. But there's many different industries on your portfolio page. And it even says in the very beginning, I guess it's your mission statement, that you seek to partner at the earliest stages with passionate founders that are building world-class products and services addressing the problems of the future. That's it's broad, but it really says it all. I mean, it wasn't a planned question, but I have to ask this. So how long did you sit in a room and brainstorm to come up with something that's clear and concise like that? Because so many people really struggle to express what it is that they're trying to accomplish,
Karen, it's a work in progress. Honestly, I reworked our blurb last week. So, just like every entrepreneur has, 30 versions of their pitch deck as it is evolved, it's the same thing for Charge. I mean, I do think that over time we've learned more and more about what we like. We do a lot of creator economy investments. So, we're very focused on tools for new forms of entrepreneurship. It's a space we like a lot. We do a lot of healthcare. I used to cover when I was an equity research analyst on Wall Street, I covered healthcare, and we think there's just healthcare is one of the last massive $1 trillion opportunities to be affected by digital technology and the internet. And then we do a lot of sort of machine learning, artificial intelligence, because I teach that at Columbia Business School, and so we're pretty familiar with basically, how computers can do statistics. And we think there's, massive sort of, it'll change the way we work with the world when we can start having, computers help us make decisions. And so those are, it looks pretty broad from the outside, but I would say all the investments that we do are, usually somewhere that someone on our team has had, personal experience either building, same thing with Future of Work. We incubated Kumo Space at Charge. And so we've been spending a ton of time thinking about what the future of work looks like for, remote distributed teams, and what's, better tooling that will help us, bring the office, the best parts of the office and turn them into software. So yeah, I think it's like, investors, I think they tend to start broad, and then they learn what they like, and then they learn what they're good at, and then they sort of build a practice in that. And I think, Charge is really no different.
Yeah, and you get the value of the collaboration of different minds in the room and different experiences, the diversity of those backgrounds that can bring. And then I think also, I mean, I know for myself, the more you see of different deals and problems that different approaches to solving problems, you have a broader perspective on the impact that new technology or a different take might be to solving something that there's some kind of a convergence or some kind of need happening. Like, let's talk about that. Let's talk about chemo space, right? We talked about the future of work, on your web, on the Charge, it says that it develops an online immersive video chat platform intended to provide remote video conferencing, but it's so much more than that. I mean, I went there to set up a free account to kind of check it out, and I think it really is a provocative foreshadowing of the potential of future work there, and really interesting. So you said it was something that you incubated, but you also are a co-founder in Chemo Space as well.
Yeah, I mean, I had the great fortune of getting to work with, the CEO of Kumo Space, Yang Mao. He's an old friend of mine. We've worked together on actually every business I've ever been involved in. And so, during the pandemic, Yang was thinking about doing his next thing. He was kind of mulling over a couple different ideas, the businesses he wanted to start. And, at Charge, we have been throwing a monthly networking event, and in person. It was an angel investing event, way of getting a bunch of, mid-career folks that were starting to think, still wanted to connect, but didn't want to go to the same kind of mixers for, 23-year-olds. And that was really great. It was a source of a lot of our deal flow. And then the pandemic hit, and we had to stop cold turkey. And everyone said, Brett, why don't you do these events over Zoom? And I thought, I don't really want to spend an hour every month giving a PowerPoint presentation to my friends. And so I talked to Yang, and I said, this really, there's not a good model for having, many to many video chat, having multiple places in the same virtual space at the same time, and being able to kind of fluidly move between conversations. And, Yang 2 weeks later came back with a prototype, and,
Wow.
that's how he operates. He moves quickly, and, has an amazing product touch. And so, that's how that collaboration started. And so, just like lucky the Charge, got to be there in the very, earliest stages of it. But, frankly, that's like all Yang, building that company and, having that initial kind of vision. We just sort of suggested the problem.
Yeah. Yeah, totally. And I like the elegance of the way it sets up. I mean, I've actually scheduled a demo or another meeting next week with one of your folks, because I wanted to understand it as potentially just what you talked about for potentially doing, as an alternative to Facebook Live or StreamYard or one of these things where you're trying to have engagement for teaching something, and all you get is like, put a comment here, put a comment there. It's going to be,
Mhm.
I think it really is an interesting approach to it. And I'd had an entrepreneur come to me a while back and had a concept that was similar, but it was like one of those where the avatar walks through and everybody creates their own avatar and that kind of a thing. And it was just really clunky, and it just, and I was, and it wasn't, and he also didn't truly understand the marketplace and what he needed, what the problem was being solved. But this was really interesting in that. And in the way that you approach it, and the kind of worlds that you've sort of created there. And I can see a future version of that that taps into Web3 at even a deeper level as well. So what
It's funny you say that. People do call Kumo Space a B2B metaverse. So, there's definitely a Web3, potential Web3 angle. And, we thought a lot about how kind of ownership could be brought into. I'm really interested in sort of where crypto meets B2B, where crypto kind of intersects with, you know, SaaS software and PLG, I think are like very interesting topics. Haven't seen a lot there, but definitely spending a lot of time on that. And yeah, Kumo Space has millions of users all over the world. People use it for, it's really focused on providing virtual offices now for teams. And so, the average user is spending 5-6 hours a day in Kumo Space on a work day. And, whole teams are spending all their time in there, and it kind of replicates some of the best parts of the physical office, knowing where your team is, being able to tap people on the shoulder, get quick answers, building strong bonds and connections, with each other, and being able to, really get work done collaboratively and quickly, even though you're remote. And so, we built it to solve our own problem. Kumo Space was always a remote company, and we were doing all these, remote events. Everyone's reaching out to us for, throwing holiday parties and doing all hands. And we kind of realized, having one event a month that's immersive actually doesn't kind of it doesn't fill the gap that was left when we got rid of the office. And Zoom and Slack are quite productive, but you don't really build those connections. You end up really siloed. Everyone's feeling isolated. And we realized, okay, we actually need to build something that people use every day. And that's how it got to Kumo Space. And so, if anyone ever wants to come in and drop by our office and check it out, I would encourage them. And, if you ever do a webinar in, Kumo Space, sounds like you were thinking about it, would be happy to help you get it up and running. We have a bunch of teams that do that all the time.
Oh, great. Oh, great. So I want to encourage everybody to go to kumospace.com. That's KUMOSPACE.com. Set up your own free trial. Go check it out. I can't wait to see how people use the beach. It's like that. Is that just, they have a.
My office is the beach, actually. In my office in Kumo Space, I have an umbrella, a beach blanket, and the sounds of the ocean at all times.
Well, there you go. That's very zen.
Trying over here.
Yeah. All right. And if you're, as we start to wrap up here, anything else you'd like to add that we haven't covered? We covered a lot of ground, but.
Oh, I would just say that, to your point, something you said earlier is that, I would, encourage everyone to, start angel investing. If you're thinking about angel investing, you might, a lot of people think, okay, it's too early. I don't have enough money. I'm not, wealthy enough. Right. And what I would say is that, you can always start now. And, because of new platforms like AngelList, it's actually easier than ever to be an angel. And, if you can show value, improve value to a company and help them find some customers or help them make an early hire, then I assure you, you'll be actually more valuable than most of the other investors in their cap table. And, you can start building your track record with, $1,000-$2,000 investments. And so important thing is, don't, entrepreneurship takes a lot of risk on one bet, right? And that's why you have to work on it 110% of your time. If you're angel investing, you don't want, just one big bet. And so one big mistake a lot of angel people who are just starting angel investing do is they put way too much money in their first investment. And so, what I would suggest is think about, okay, how am I going to have at least 30 or 40 portfolio, 30, 40 investments if you're doing early stage? And, how much money is that going to take? And how long am I going to deploy that? So if it's going to do 40 investments and, I'm going to put in, $2,000 because it's $80,000. Sounds like a lot, but you might do that over 5 years, right? So then, really it's like, okay, can I afford $8,000, dollars, $8,000 to $15,000 a year? So, I would just encourage you, get started today, and start building that track record. And Karen, so plenty of great resources there if you're trying to figure it out.
Thank you so very much. I swear to God, I feel like it was like the what did they say? The moon was in the seventh house and the Jupiter was aligned with Mars. You just like, did you? I know you haven't, I don't think you read my book, but yeah, that's exactly the advice that I say for getting started. And I'm working on a curriculum to launch in 2023 that will really help people very comfortably, confidently get started and, embrace this as an asset class to include in their portfolio because it is where the greatest wealth is created. So thank you for sharing your insights that are so perfect because you are a compassionate capitalist and we're going to make more of them.
Amen. Karen, thanks so much for having me.
Thank you so very much and onwards and upwards. Have a great day.